Hello, this is the ChartProfit video, Friday 29th of January, just about over an hour into the trading day. This is from the pre-open today. In the short term, the encouraging sign here on the E-mini S&P is the fact that throughout this week, the 1870 support that we've been watching for a while now was tested earlier in the week on Monday, again on Wednesday, and again yesterday. And all of these little probes below that level were rejected. And as said today, a fifth consecutive value area was generated above this level. These blue areas here. So all value areas this week and last Friday's as well generated above that point of control. We know this is a strong pattern in the short term. As I've said, we're attempting to rally from a deeply oversold condition, but I need to see effective buying marked above 1870 before considering the long side on any time frame. But the fact that this has held and the value areas this week have been generated above that level is encouraging. I said if the E-mini could hold the 35-day point of control, the minor 1886.50 post-open, I would look for a relatively strong end to the week, and that would be a further positive. And if we look here on the hourly chart from this week, you can see those probes below that level. I think we're probably today here just printing a new high for the week. What I want to see in the longer time frame, if we get a strong close for this week, what we're looking for, this is from the eBook showing data through last week, we're looking for buyers active but without the ineffective underneath it. So we're looking for buyers active on this time frame, strong close to the week above Monday to Wednesday's range with a higher bar for the week. And that kind of positive weekly structure we haven't seen for quite a while. So let's just look at the pulse chart. We've seen no green on the chart here like this for about 20 trading days from mid-December, and that's the next minor positive. The minor positives on here are the fact that the momentum has just turned up. Obviously the breadth is yet to be supportive. But if you look at the spider and the 187, it's actually 187.2 time support in here, long-term, really long-term level that's supported back over here and was probed here. The fact that we may have here a higher low, if we see a move higher, that's a positive, making a higher low on a point of control. But the first positive I want now is to see some green coming in, some effective buying above this point of control, and you can see that the pulse chart in kind of positive environment has a radically different look to it. For instance, here a lot more green than we have at the moment. So I don't want to get too excited about the long side just yet. I showed this chart earlier in the week. It was an hourly chart of light crude futures and E-mini S&P, and the striking correlation in their moves, just showing how the equity market is looking to the oil price. If I just update that chart through to current, you can see right now oil is having a decent rally off this low, and here we are on the current daily chart for oil, and off this low I mentioned in the pre-open, we had actually off this high here, we had a halfway point retracement, which is the first thing to look for, very minor time frame. We're now pushing out to a new high for this move, so still all eyes on this chart. Also I've been mentioning on the four major stock index ETFs that the price oscillator, the momentum, has picked up here, as we've just seen on the pulse chart. We see it here on the diamonds as well. While we're on the diamonds chart, we know the major point of control is at 164, and this may well be difficult resistance for this chart. Price above that level would be a real positive, but be interesting to see how the chart behaves when it hits this resistance if we get there next week. Showed this chart last week. This is TLT, the T-bond ETF, daily price distribution from 2011, and we looked at the value area high up here, which had been probed twice and rejected, about 127, which is kind of here. Said last week that corresponded with the halfway point off last year's high up here, and currently TLT attempting to print some time above that halfway point. Bonds holding this point, this support, An accepting price at that value area high would be real positive for this chart, especially if we see something like a higher low here. Currently seeing bonds and stocks in the short term at least pushing higher at the same time. We've got used to seeing these two charts moving inversely, so we'll possibly see one of them reverse at some point here. Just want to look at gold before we look at the dollar charts. So we printed a 61-day high on Wednesday this week, but as I mentioned here, it's still in a long-term weak price location. It's been a decent rally. We're looking at GLD here. Been a decent rally from the December low late last year here. I'm not totally convinced with this rally. I've read lots of bullish comment recently. First thing I'd look for, considering we've had such a long-term downtrend, first thing I want to see is something like this 24-month up here migrating down here somewhere and then price above that, and I think we're a long way off that. So we've talked the last few webcasts about the ranging price action in the dollar index and the Euro FX chart and others. Possibility of minor points of control migrating, which as we know as of last week they have. I've said pre-open today, probe in early December above the March high was rejected. If the chart can now hold the minor half range off that high, I would look for a break higher. So I'm seeing the possibility once again of further strength in the dollar. Here's the March high last year over here to the low. The halfway point was resistance. We then had that little pattern there which was bullish, and we just tested the March high up here, and then we got the minor half range, and we're currently printing above that, possibly pushing out to a point where we think, well, we're going to see a test, and I think if we do, we'll see it higher. I talked last week about the possibility of a move up, the high 102s, 103. That's what I'll be looking for. First thing I'm looking for this level that I've just drawn in, that halfway point of the recent high to hold. Price back below here would negate that. Price back below this level, about 96.50, would negate it in the longer term. I'm actually hoping for a drive higher here. I know recently on the Euro FX chart, the 12-month migrated down to this level, 109.25, and this chart is in a weak price location, which will help the dollar index higher. Had the announcement from the Bank of Japan, and the dollar is rallying strongly here against the yen. So we're now above the major, we're above the 12-month, and we're just currently trying to probe above that halfway point off the high back over here last year, and so price in here consolidating above that level are currently where we are, just above 121. Help this chart and the dollar. Looking at the pound dollar, we talked about all this massive overhead resistance up here, and we watched the halfway point off this low which came in here, and then we had this pattern, this lower high, and we talked about a retest of the low which we've seen. And if we zoom out to a weekly chart for the last few years, we can see these new lows here. And if I look at the monthly chart for the Aussie dollar, the big level on here off the 2001 low to the subsequent high here on this monthly chart, here's the major half range and here's the major point of control, and we've been consolidating for months now below that level, still in a really weak price location. If we just zoom in on the daily chart, here's the big resistance we talked about. There is a 12-month time resistance level at spot 71.88 up here, and we're in really weak price location on this chart as well. Just want to finish looking at the sentiment. This is the public poll from AAII. Bulls percent was actually higher this week, so an increase in optimism this week, 29.8% for the bulls. Remembering that 2 weeks ago the bulls percentage at 17.9% was the lowest since April 2005. Bears percent was slightly lower this week at 40%. More than slightly, actually, down from last week's 48.7%, which was the highest since 2013. So, although we have seen quite an increase in optimism just this week, remember that comes from a very pessimistic level. And if we look on here at the black line, which is the 4-week moving average of the net, which is the bulls minus the bears, an important indicator to follow, I think, that is now lower than it has been since 2009. So, from a contrarian point of view, this is overly pessimistic to a point where we normally see the market at least consolidating but hopefully pushing higher here. And again, looking at that same longer term indicator in the Investors Intelligence poll, 4-week moving average of net has just broken below the level it reached back in September, and that's just here, this black line at a 4-week low, sorry, a 4-year low this week. Exposure index, active money managers, current equity exposure. The index is actually higher this week at 42.25, but last week's index at 26.32, that was a 16-week low, and below the level that usually is regarded as too pessimistic. And also look at US fund flows. They reported equity fund, including ETF outflows this week of $1.2 billion. Not a high number, but the 4-week flow, the black line here, is at an extremely low level. And finally, the Ridex ratio, or my version of the Ridex ratio. Thursday was slightly higher at 4 exactly. And as you know, late last year, the ratio reached as high as 9.17. But last week it fell to 3.52, and that's as low as it has been for 2 years, except for the sell-off late last year when the ratio fell to 3. So 3 was slightly lower down here. Over the last 2 or 3 years, that's been pretty low. So there's the point in late December where the ratio got above 9, which was a multi-month high, which is up here. That was just showing a little bit too much optimism. We've seen the sell-off, and of course the indicator has fallen really sharply back down to these levels. Nothing in any of this so far to preclude a retest of these lows. Whatever happens, I'm hoping the ratio at the bottom here doesn't rally too quickly. Just updated these. This is the assets in total, bulls and bear assets that I follow in total, and we've seen that that summation number tends to get too high and too low at the wrong time, and recently they've been down to levels which in the past have seen the market turn higher. Bear fund assets in isolation that I follow recently at the low here reached a multi-month high, so a lot of bears here, and this is a pretty reliable indicator. The bull fund assets in isolation, looking back over 2 or 3 years, they broke below this level, seem to provide fuel for a rally back up, and we've been just recently really low on this number. Okay, just the last look at the spider. As I mentioned, we're hoping for a strong end to the day and the week, and that may be our first strong weekly structure that we've seen for quite a good few number of weeks. So that concludes. Once again, I wish you a good weekend, and thank you for watching.